Well, reporting season brings out the best in FNArena's Rudy Van Dyke. So let's just see what companies have grabbed his attention as potentially good investments and which ones should be dumped unceremoniously. Rudy Van Dyke, thanks for joining us.
It's, as always, it's a pleasure.
Okay, let's not muck around, because we can muck around all night, Rudy, but let's just go to companies, tell us whether you like them or don't like them and whatever. Santos, what do you think of the report today?
Oh, well, probably fair to say they surprised in a positive sense, and that probably will mean that brokers will probably be upgrading forecasts and the valuation, but it should not be underestimated. This company remains victim to whatever the oil price does. I mean, management can only do so much, but if you take a positive scenario and you're positive on oil, then Santos, with the right risk appetite, I should add, might be having a position in people's portfolio.
Yeah, it seems to me, and I called it a problem child in my introduction, it has been exactly that, hasn't it? And maybe this wily Scotsman in Kevin Gallagher is actually whipping them into shape.
Well, as an investor, you should always appreciate that management can only do so much. In particular, when you're running a company like Santos, and they're still hobbling around because they have made significant mistakes in the past, and that balance sheet still needs more repairing. And but they're getting their costs down, and at the current oil price, there's a lot of cash coming in there.
Okay, here's a perennial disappointing company, HealthScope.
Where do I start? Right. I actually, with the likes of HealthScope, I would like to make a point here, and that's a point I make quite often. When most investors get an option in front of them, and let's say they want to have exposure to the hospital industry, and they have an option between two companies. One is Ramsay Healthcare, and one is HealthScope. Yeah. Right? 99% of the times, and even fund managers do this, they take the cheaper one, because they always go, oh, this one is cheaper, the other one is overvalued. Yeah. The irony about this is that more often than not, there's a very good reason why one is cheaper and the other one is more expensive. And call me the contrarian in this case or whatever, but I almost every time I take Ramsay Healthcare, almost every time. And what you can see this reporting season is that there's a reason why, because Ramsay still has to report.
That's tomorrow.
Way, but I'm pretty confident they will not do a HealthScope tomorrow. And they haven't done a HealthScope for many years. And what you see, and people like me often talk about quality, the quality of the business itself. And that quality is not always apparent, but when the pressure was on, and at this point in time, the pressure was on in the local hospital industry, then you will find that the ones who crack first are the lower quality ones. That's in this case HealthScope, which doesn't really help them, has been taken to the boards again a few years ago by private equity, giving them
you've given them enough. Move on. Give you a chance to boast for a while here. Fortescue, you told us it would be a great dividend payer, and it probably even delivered more than what you expected.
Yes, well, yes, definitely. They surprised the upside. Not so much about the result, but the cash flows are amazing. And again, it's easy to forget, but they are also victim to the iron ore price, which at this point in time is higher for longer. It doesn't mean that the price won't come down. I still think that it will come down, but it would appear that's not going to happen imminently. And in the meantime, these guys are just churning cash. I mean, it's coming out of every corner of the wall there.
Yeah, when I was interviewing Nev Power, the CEO, the question I needed to ask him was, because of this result and the improvement in the company, the report clearly shows that, I said, do you suspect your company will be less volatile than it has been, namely when prices fall, it falls more than BHP and Rio, and when prices rise, it rises more than BHP and Rio. Rudy, do you suspect it's going to be less volatile than it has been in the past?
Not in the short term, I don't think so, because old habits die only very gradually. But I do think you're making a good point. There will come a point when it's in particular to the downside, when people will start making note of the yield that's there, and that means the downside then becomes limited. Yes.
Yep. Okay. You also wisely tipped us into Babcorp, and they delivered.
Well, this is actually okay. Yes, that's true. And
Pat yourself on the back.
And I actually bought some extra shares when I thought the market was getting a little bit stupid about it.
Yeah.
And I'm very happy. I'm very happy that they delivered and did disappoint. And this is probably a lesson here as well, that if you are convinced as an investor that you have a good stock and the market is temporarily just spitting it out, not interested, whatever, then a lot of people would go like, well, I'm just selling the shares because they're not doing anything. But sometimes you just have to stick to your point and you think like, I'm convinced that this is a good stock. This is one of, I remain of the view, this is one of the most resilient, solid growth stories in the Australian share market. It's just that sometimes the market just doesn't want to go there.
Yeah.
And now I expect actually that the share price will have an upward momentum now because they've again proven that they're worth it.
Okay, we patted you on the back for Babcock and Fortescue, but here, there and everywhere didn't do as well. It wasn't a stock that you were overcommitted to, but you thought it might actually do well. What happened?
Their radio operations disappointed, and that meant
Ratings are important.
in this case, sometimes it was one of those stocks where the share price looked very low. And I thought that's worth a punt.
Yeah.
It looks very low. Well, in this case, maybe it's been proven now the share price was low for a reason.
Okay.
And maybe we have to wait a little bit longer before the share price can recover.
Icentia has had a shocker. Then the market thought that things were getting better because they'd got rid of their content provider and whatever. But today's report, this week's report,
yes.
What's the bad news there?
Oh, it just doesn't stop over there. I mean, I've previously said that Icentia, I believe, could become like a Woolworths story, where the market leader gets pressure on the margins, essentially. And that is, if you read the analysts who are cautious or negative, that's exactly their expectation. That's their fear, that's their concern.
Yeah.
That while Icentia has a strong position in Australia, they have high margins, they have a massive market share, and obviously they're moving into other sectors is, to put it mildly, hasn't gone smoothly.
Yeah.
Their Asian operations are not performing in line with expectations, and the local ones, high margins, probably have to revert to lower margins. Personally, I think it's another example of a low share price wasn't low enough in the end. And sure, I mean, there will be a time when it's low enough, but you won't find me there. I'm not a bottom feeder, and I prefer companies that perform on the upside, and I mean, I'm ready to pay a little bit more for them.
All right, mate, I could talk to you all night, as I said earlier, but we're out of time, so thanks for joining us anyway.
Damn.
Isn't it great? Guests really upset they can't talk to me any longer. That's the kind of guy Rudy Philippek Van Dyke is. After the break, our in-house admin Adam Ferrier joins me live to look at why brands are edging or going long into the charity space.